Hi there and welcome to this video series where I will be searching for the best trading strategy for cryptocurrency trading. In each video I'm going to test a strategy that is explained by a YouTube strategy video on a trading site or is developed by somebody and is publicly available for use. Each strategy will be tested on its performance by trading multiple digital asset pairs over their largest possible backtest period. The results of this strategy test is then compared with the results of earlier tested strategies. Hopefully I can find the best strategy for automatic cryptocurrency trading and you can benefit from my work as well. So watch to the end of this video to see how the strategy performs in comparison with other investigated strategies. Also, if you like the contents of this video, please subscribe and like my videos. You would help me a lot by doing this and it keeps me motivated to investigate more useful strategies. Here you see the principles for testing the strategies. Some choices are arbitrary, like the amount of open trades at one time and the choice between compounding stake amounts or using the same stake for each and every trade. However, I had to make an informed decision on how to reasonably measure performance between multiple strategies and keep in mind that there is also a profit to make. The whole idea behind the setup is that the strategy should be tested under mechanical circumstances and no further human interpretation should be necessary. This way I'm taking all the emotions out of trading and I hope to find out the raw performance of the proposed strategy. Secondly, by finding out if a strategy is performing under mechanical circumstances, you can turn the strategy into programming code and use it with a trading bot. With a bot you are always ready for trading opportunities because crypto trading is a 24/7 365 business. The last reason is that this way you can backtest your strategy in a mechanical way. This takes the grinding out of the process and hopefully give you a good indication on the strategy's performance. Every time I test a strategy I will follow the next approach. I will test a strategy on multiple timeframes, even when it's advised to use it only on one time frame. Then I will choose the time frame with the best results. Next I will optimize it one more time with hyperparameter optimization and then I will backtest one more time with the optimized parameters. And finally, I take the best results and compare them with other strategies which I have tested earlier. This way I hope to find the best strategy for cryptocurrency trading. Now let's proceed with the strategy. In this video I will be investigating the MACD indicator and test out if it's a profitable indicator in combination with the 21 simple moving average. The MACD acts as my primary indicator and the simple moving average is my confirmation indicator. There are literally hundreds of websites and videos which describe how MACD is calculated and how it works, so I leave it up to you to do your own research on the internal workings of this indicator. My main goal is to see if this indicator is profitable when using it in a mechanical trading system. I'm using the default MACD settings because a lot of people use these settings and this way there's a higher probability that more people act on the same signal. The strategy is as follows. Enter the trade if MACD crosses over the signal line and the price is above or crosses above the 21 simple moving average. Exit the trade when the MACD crosses below the signal line or price close below the 21 simple moving average. Besides the entry and exit signals of the strategy based on the indicators, there are also stop loss and take profit points that can be used. These stop loss and take profit levels are later determined by the hyperopt functionality of the bot and are percentage based exit levels. In pseudocode the strategy looks like this. These lines should be programmed into easily understandable Python code that is compatible with the trading bot for the automatic backtest. Because I will use Freqtrade as my tool for backtesting data, my code will be based on this software. However, because it's Python code as I said, it should be easy to read and understand. That is if you know some Python programming of course. I will leave this code on my blog site later on so that you can use this code as well for your own backtesting and strategy building. Now let's begin with the backtest of the strategy on multiple time frames and see the results. After backtesting and writing down all the backtest information in a sheet, I have the following results. You can see that the daily time frame has the best results overall. Also you can see that the lesser the time frame, the more bad trades there are. Strangely, the difference between time frames lower than 4 hours have roughly the same results. Possibly because at that point there are no more funds available to put on a trade. Now let's start hyperparameter optimization and investigate if there are better results to make when using a better stop loss and take profit setting. Also, let me investigate which simple moving average provides better results than the 21 SMA I used in this strategy. After I applied the parameter optimization session, the bot returned the following advice. Change the 21 SMA to a 26 simple moving average, apply a stop loss of -28% to let the trade breathe, and apply multiple time-based points to guarantee profits. You can find these in my blog, I'll put a link in the description below. These small changes improved the strategy's performance by 44%. So the conclusions of my analysis of this strategy are that the best time frame for this MACD SMA crossover strategy is a 1-day time frame, and that if you have started with $1,000, you now could have slightly over $39,000. That's a profit of more than 3,800%. However, you risk a drawdown from the highest point of around 467%. The point where the drawdown starts is dependent on market circumstances and very unpredictable, so you should be very aware of this when starting to trade with a bot. I calculated that the risk of ruin is 170% because you have more losing trades than winning trades. However, this is a swing trade strategy in which you should let your winners run and cut your losses. It is somewhat expected to have more losing trades than winners, because this strategy would probably bleach your account during ranging markets. That's probably also what causes the high drawdown. In this case, Luna performed the best with 57% wins and more than 500% profit. Polkadot was the worst performing asset in this portfolio with a win rate of only 18% and a loss of 772%. Overall, there were more winning pairs than losing pairs with this strategy, and that's hopeful. So I'm now going to enter the results in the overall strategy comparison sheet. Because this is my first video in the series, I cannot compare this with another strategy. However, up until now it seems that this strategy is profitable in the long run. But you have to be aware of the risks and possible drawdown involved. Not every crypto pair was successful in 2021, and you can see this clearly in this test. So if you make a crypto pairs list that is based on the current top 50 coins, then there could be a possibility that this will give similar results. So if you want to use this strategy, please do your own research before using it under live trading circumstances. And with this result, I am at the end of this video. If you like the content and you think it was worth your time, then please click on the like button and let me know in the comments section. Also, please subscribe to my channel and click on the notification bell to get updated on new content. And I see you in the next video. Goodbye!